Welcome back to the Brent Bruce Daily for January the 25th, 2023. It is now 5:19 p.m. Central Time, much later than I normally put my report out. And I have to apologize. I haven't put a report out for a couple of days. I've been busy opening our newest branch location of our company here in Gallatin, Tennessee, which is Middle Tennessee. And that's had me kind of away from my desk and away from my camera. So we need to update you on what's been going on the last couple of days. But more importantly, understanding that the big day this week is Friday, okay? Friday the 27th is when we're going to get our personal consumption expenditures report for the month of December. That report is going to be very important to understanding if we are going to continue down the path that I laid out in my annual projection to getting to a 4.875% or somewhere below 5% on our 30-year fixed conventional home loan by July the 1st of this year, 2023. These are the reports that are going to make a difference as to whether that happens or not. The personal consumption expenditures report is number 2 on our list of 3 that we're really watching. Sometimes I say 4 because we have that producer price index that we talk about as well. Number 1 is the Federal Reserve and the adjustments that they make to the federal funds rate. Number 2 is the personal consumption expenditures report, which is a report that is coming out on Friday. And number 3 is the CPI, which is the consumer price index. The fourth that we talk about sometimes is the producer price index. So Friday, the 27th, is the big report, number 2. Then after that, February the 1st, we're going to get the number 1 report, which is going to be the adjustment to the federal funds rate. So tomorrow, Thursday, the day before we get this report, we're going to make our game plan. We're going to talk about what we think is going to happen and what we want to happen and what should happen with home loan interest rates if those things occur. So this is why we pay attention. This is why you watch the Brent Bruce Daily, because you need to know what's going to be happening to home loan interest rates in the future, or at least have some sort of an understanding of what should happen and how those things move. So let's take a look and see where we are. Currently, we're up 19 basis points on our mortgage-backed security. We're down 2 basis points on the 10-year Treasury. These are both good things. Overall, I think the markets are really waiting for the report that is going to be coming out here on Friday. So let's take a look and see this chart here. We've been really battling between this top Fibonacci level here at 101.671 and the 25-day moving average, which today is sitting at 101.061. Now, look at how long we've been in between this ceiling and this floor. It has been, I believe I added this up, and it was 14 days that we've been battling up and down in this range. If we go all the way back to this wonderful day here, what was that? This was the day that we received a report on employment. And within this report, it showed good employment numbers, but we look close enough and we dig further in to find out that the reason that the bond market liked this report was because it showed a reduction or a slowdown in wage-based inflation, which is part 2 component of what's called inflation spiral. Go back and watch my videos in the past if you're not sure what I'm talking about. But basically, it means that it's good for home loan interest rates. So what do I think we're going to be doing here? I think that, a little bit of a sneak peek to our Friday report and our Thursday projection or our Thursday game plan is that we're going to be in a fight here. We are going to be in a fight very soon. And the fight is with the 200-day moving average. We have not fought the 200-day moving average for many months. And we need to get to this level here if we're going to break through and begin to see the 5s. We need to see the 5s more consistently. We're dropping into the 5s here and there, but we're really not staying in the 5s long enough. And then we're back at 6.125 or 6.0 or 6.25 on the Brent Bruce Daily. We need to stay in the 5s in order to start moving down that range of 5s to where we can get to those 4s again by July the 1st. I mean, hey, we're coming up on February already. So it is important for that to start moving in the right direction. So if we go over here and let's take a look and see exactly where we are on our home loan interest rates today. Let's pull up our scenarios. I'm going to pull up the Brent Bruce Daily, which is our very well-qualified 30-year fixed conventional home loan. Again, absolutely perfect credit, 800 FICO scores, 25% down, owner-occupied, single-family residence, the best of the best. I mean, maybe if you put down 50%, you might get a little bit lower rate. But let's take a look. All right. So 6.125% is giving a credit of about $1,051. This has kind of been consistent for the last few days. So you haven't missed a whole lot in the last couple of reports because this is about where we have been. Now let's take a look and see how far we are from getting to that 5.99. So I'm going to open up United because I looked at this earlier in the day and I saw that, what do you know, I can give you a 5.999 for $7. So realistically, where are we today? For a very well qualified 30-year fixed conventional home loan, we're at 5.999 with essentially no points. Now, here are the parameters for the numbers that we're talking about here today. Because I showed this here, I am now in compliance. So let's go back and cancel this out. What if somebody wants to pay maybe a point? We always like to take a look at that because especially in today's market, sellers are very willing to pay a point if that means getting their house under contract. So if you want to pay a point or a little bit more, 1.164 on the points, it's going to be at 5.625. Okay. So it is wonderful that we are now talking about the fives, but I want to stay in the fives all the time. I want to be talking about paying a point to get to 5.25, paying a point to get to 5.0. Now, currently, as you know, on the FHA loans, if you want to pay a point, I can probably get you to 4.99. That's probably possible. But we want to see that on our conventional home loans because that is still the largest majority of all home loans, and it's the benchmark that people pay attention to. So that is where we are right now on our Brent Bruce daily home loan interest rate. We are going to be battling. So we really want to look forward to the fight with the 200-day moving average. Now, whether we even win that fight or not, we just need to have that fight. We haven't even fought with it for months. So that's what we're going to be talking about tomorrow. Make sure that you pay attention to our report tomorrow as we make our game plan and our expectations for the personal consumption expenditures report that is coming out on Friday, the 27th. We'll talk to you then.